When the jobs numbers came out, bond yields dropped almost 0.5% last time I looked. And, everyone is saying that, see, this is proof that we're going to have a soft landing because, bad news is good news. And, I just think we're at this is the tip of the iceberg. I really think we're at a tipping point with debt, inflation, everything else. And, this may be a little bit of a rally, but I really believe that it's going to be short-lived.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, we've gotten jobs numbers out. Hey, remember, those are just the opening job numbers, the ones that gobble up the headlines. They're not necessarily the actual number. They might not even be close because 8 of the 9 last month's jobs numbers have been revised downwards afterwards. What's that all about? Hey, got Ed Siddell on with us now. Got a question or a comment? Write us an email, kl@kerrylutz.com. And hey, Eddie, it's great to have you back. Oh, by the way, you find Eddie, his website, egsifinancial.com. And hope I got that right. Eddie, it's great to have you back. So what about these job numbers? They came in lower than expected, and we can probably expect a downward revision, right?
Go even downward further, yeah. So thanks for having me back. Excuse me. And it's not a shock. I mean, everything's really starting to slow down. And they keep revising all the numbers. They pump it up to make it look good so that the economy is thriving. But we said this before, this is kind of like a silent recession, and I would not be surprised if they revise these numbers downwards next month even further when the true stats come out.
In fact, I'd be surprised if they didn't, Eddie.
Yeah, I agree completely. It is when the jobs numbers came out, bond yields dropped almost 0.5% last time I looked. And, everyone is saying that, see, this is proof that we're going to have a soft landing because, bad news is good news. And, I just think we're at this is the tip of the iceberg. I really think we're at a tipping point with debt, inflation, everything else. And, this may be a little bit of a rally, but I really believe that it's going to be short-lived.
Mm-hmm. I no doubt. I think you are correct. I mean, the other economic numbers are hardly encouraging as well, are they?
Yeah, I mean, they're really not. All the way across the board. The stats that came out that credit card debt is $1.34 trillion roughly, and half of that was an increase, or there was a 50% increase in credit card debt in just over the last 12 months. And so we're talking about this growing economy, but it's on the back of consumer debt. And that is not the sign of a strong economy when consumer debt is going up. And then you also have, savings going down at the same time. So again, you've got consumer debt, the national debt, both, the national debt and then the unfunded liabilities that people aren't even talking about. And, I don't know if we've hit the point of no return. And if not, boy, I'll tell you what, if we don't make any changes soon, we're going to be pretty close.
No doubt. We have a lot to look forward to here, don't we? So, but the economy in general, we got wars going on. They're inflationary by their very nature. So you just print more money out of thin air to pay for these things. The last war that got paid for out of real money, I think, was Napoleon. He sold the Louisiana territory to the United States, took that money and wisely invested it in war. I'm being facetious. And we haven't learned anything since then, have we?
Yeah, the old saying, if you don't learn from history, you're destined to repeat it. And we're talking about recent history. I mean, we're kind of following, what Argentina is doing, but, at a much grander scale. They're having 100% inflation year over year. I mean, obviously we're not there yet, but, we've got, 2 proxy wars. We're getting ready to, looks like possibly a third one, and even more. So, in the same bad actors are involved in all 3 of those fronts. So, we're exporting our our energy needs to our enemies instead of developing it here. And so, I mean, we just continue to back ourselves in a corner. And then the other part that's really been frustrating is not just Janet Yellen, but all the Treasury secretaries. Nobody has refinanced our debt over a longer period of time. We've been doing it over 90 days, 1 year, 2 years, instead of locking in these long-term rates at 120, 150, 180 basis points, and now we're stuck at 4.5%, 5%, which is that takes a huge chunk out of our budget, which we're not following anyways.
Yeah, what's a budget? We haven't had a budget. We just have continuing resolutions, locking in spending and increasing the spending, right? Well,
that's exactly it. So it'll be interesting to see what the new speaker does, Mike Johnson, and if he does lead us, because I think we've been devoid of any kind of leadership. I mean, real leadership in D.C. This isn't a Republican or Democrat thing. I mean, on any side of the fence, it's all about spending and special interest and everything else. So, let's see if they have the Americans in mind, and I guess we'll learn soon enough.
Yeah, I guess we will at that. Hey, so what do you think's going to happen here
with the economy?
With the economy and the budget and all of that good stuff.
So, let's do the first one, which is the easiest one, which is the budget. I think the House is so fractured, it's going to be impossible to get a budget passed. I really do. Unfortunately, I have a bad feeling that they're going to raise the debt ceiling limit again. The whole purpose of that ceiling is to say, oh, here we go. That's the stop loss. You can't go any further. But again, in D.C., anything and everything seems to be possible as far as spending our money. And that kind of
you mean when it comes to cooking the books, anything is possible, right? Actually, acting responsibly, that's a whole different story, isn't it?
It really is. We're pushing $34 trillion already. It's over 33.7 trillion right now, or right at it. Excuse me. But we're not even talking about the unfunded liabilities. Social Security, Medicare, government pensions. In 2011, it was estimated that those unfunded liabilities were roughly 128 trillion. And just in case, so unfunded liabilities is kind of like having a 30-year mortgage and you don't have the money for it. So that's why you get the mortgage. So it's a debt that's owed, over a certain period of time.
That's a wonderful thing, huh?
Yeah, especially at 8%, right? And so these unfunded liabilities, it was 128 trillion back then. The CBO came out with a report at the end of 2019 estimating that it was going to be roughly 161, 65 trillion. The new estimate that's supposed to come out in March of 2024 for 2023 is estimating that, it's going to be as high as 184 trillion on top of the, 34 trillion. I mean, we're well over $200 trillion. So I keep talking about this debt bubble. This is inflation. We're fighting wars on multiple fronts, or about to. I mean, we are. No one's even talking about them yet. And this is why, from a market standpoint, as it relates to the economy, investing short term, I'm not even a big fan of short term treasuries right now, because no one's going up at the auctions. And so the U.S. is the only one who's buying those treasuries, and we'll find out for sure again next Wednesday, during the next auction meeting. But as we look at all this debt, the Feds have 2 options. They can either deflate it or inflate it. Well, we all know on recent history in the last 20, 30 years, they're going to inflate it, especially to cover these wars. And so that value of the dollar is going to continue to go down. And that's my biggest fear right now is, we could be living in a much different world, down the road than what we are right now. So, having short-term instruments, cash, gold, silver, and commodities, because commodities have significantly outpaced the S&P, not just this year, but over the last couple of years, especially in inflationary times. So those companies that are part of that, whether it's Exxon, Mobil, mining stocks, et cetera, as far as if you want to participate in the market. But I think right now, patience is going to be the virtue that's going to save those people who take part in that.
All right. Well, we could go on a bit more on this, but it's kind of inevitable here. Is there anything out there that you see that can change the path that we're heading on here, Eddie?
If Mike Johnson and Congress, they all get together, they start cutting expenses, get rid of special interest, keep track of where the money's going that we're spending overseas in these wars, and actually audit and figure it out. Mm-hmm. We may have a chance. I'm not in the camp yet that we are past the point of no return, because I'm still hopeful. But if we don't do something quickly between now and the next 12 to 18 months, it might be too late to come back.
All right. Well, hey, I guess we'll leave it at that. Hey, the link to Eddie's site is in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. And got a question and comment for Eddie or myself, shoot me an email, kl@kerrylutz.com. Eddie, I wish the news was better, but it's always great talking to you.
Absolutely. Have a great weekend.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.